Yeah, I'll talk about the potential pullback since you mentioned it. Anytime you get really frothy in a market and you break a key resistance level like 1900, it could sideways trade or even come back and retest that as support again. So you could see gold retrace back into the high 1800s again. And then if it does, the key to whether this is a sustainable rally is, does it double top? Does it pop back through? If it pops back through and stays, then you know you have a strong rally. Right now, it's kind of a nascent or an early stage rally. We're not sure on the technical charts. We like to see it continue to stay above 1900. And the reason is we're talking about the futures price, not physical. And that's the way those traders trade that market. Now, if you're looking to get into gold and silver, I say, again, we're not financial advisors, but what I typically do is dollar cost average. I'll look for a little bit of a pullback on a peak and buy. Of course, I've been buying a lot lately because we had that pullback from 2069. So there's a whole cycle. You could have bought all the way down to like the high 1600s, and where it popped back through would be a good time to buy. Is it a good time to buy now? It could be. I mean, you could look for some short-term weakness. Maybe gold pops back down to 1870, 1880, before it retries. And if you want to wait for that. On the other hand, if the earnings reports come in and we've got a lot of negativity and generalists are saying, okay, I'm rotating out of stocks now, it looks like 2024 is going to be more of 2023, and you see that negative news, I would not expect gold to stay down for long. I do expect it to come back and retest 1900, at least on a daily chart. If we get extremely positive news in fourth quarter earnings reports, gold could fade back a little bit and have some weakness. So you really got to kind of see what those reports are going to tell us. So you have to pay attention to fundamentals. The traders do. And so if you see weakness in fundamentals, gold rise, I would say don't wait for a dip. If you see some economic strength in the numbers, you could expect gold to dip. That would be an ideal buying time. That's more on the trading perspective. On the long term, I say just buy whenever you can, because you're going to dollar cost average in. Be careful of just waiting for the perfect entry point. You may not get it. If the gold runs this year because of bad economic data, you may not get another entry point like this one. And again, that's the chance that you take. So really just pay attention to the economic data. Pay attention to your channel and our channel. We'll read out for the guys, what's going on. It kind of gives you an idea where you think that gold and silver market could go.
One of the things that people can also look at is what the big money is doing and also what the banks are doing. I know a few months ago, depending on how you read the data, people were saying that a lot of the banks were going long gold and silver. If you can correct me, you can correct me on that if I'm wrong. But I believe now you put out a video saying that they're actually going short. So at least for silver. So what are the banks doing right now in the precious metal markets?
So probably the last 6 months of last year, they had positioned net long in silver, meaning they had more longs and shorts. And you can hold both positions. You can open a long, a short, and you just take the aggregate or the difference between the two, if you will, to see are they net long or net short, or how are they overall positioned across their portfolio. Since we're looking at the big groups of traders, it gives us an idea across the market kind of how that works. So for the last 6 months, in silver, they had piled into the net long position, and that's one of the reasons silver began its run, because it was allowed to do that, because what had been short pressure was turning into long pressure. On gold, they had slowly increased their long position. They were still net short, so they still had a more pessimistic view on gold, and that had changed in silver, where they had gone net long and they were piling into gold. So you thought, oh, there's momentum on the banker side. And I call the bankers the sharps, because they really kind of know what's going on. They're the guys that play it for their own house account as well for the customers. They have all that trading data to kind of know where things are going to go. So I kind of follow them first, and then I'll follow the other guys like the managed money second, because it's not their specialty. They play in the market for speculation. They're not really, they're not the house. They don't understand as much how it works. So, but what had changed was, once the gold and silver price popped to start January, now the bullion banks are reversing and going short again. So now they're net short in silver. So now they're applying the short position. So that's why I said you could see a little bit of a pullback coming, because it got frothy. And I think once it got frothy, the bullion bank said, it's too frothy, we're going to short a little bit, take some money. And so that's why I'm expecting gold and silver could even pull back just a tad here. It'll make the derivative traders a little bit of money on each contract. They'll make a few pennies on, thousands of contracts. They'll be happy. And then we could see the resumption of this bull market. But because of the positioning I'm seeing on the COT report, it looks like we could have a little bit of a fade maybe in gold, silver. But again, that COT report comes out in arrears. It's old. So we are only looking at previous week's data. So right now they could be piling back long, and we wouldn't get that until next week. So because that's a little bit of a tough report to read, it's always in arrears. You're always getting that data after. So I think the fade that we've had the last day or so in gold where it's kind of just even traded, that was the bullion banks repositioning. Now we'll see if they continue to do that and what happens in the next few weeks. That's more of on the weekly trade side of it. Long term, however, it does appear to me that the market wants to go long gold and silver despite where the bullion banks are positioning. And that's the big change this time, is the trend is against the bullion banks at the moment, because I think what people expect for 2024. And this is where the market can overwhelm the bullion banks and the derivative traders. We often say that the market often overwhelms what's going on in the trade. And I think if the market really wants to go long in silver, they can push that price wherever they want, and the bullion banks won't be able to stop it, and neither will anybody else.
All right. Well, Robert, thank you so much for your time today. What are some of the main things that people should be looking out for in 2023? If you want to reiterate that for our viewers, and also where people can find you online if they want to continue to track this with you.
Pay attention to the economic data. This is going to be a really huge year, Elijah, for the economy. If the economy is really hitting a recession, if we get into official recession, we're going to blow way past 2969 gold. We maybe get to 2400. Silver will pop maybe into the 40s, maybe approach 50, because this recession, I think, is going to be a deep one. And so when it kicks off, when you hear Bank of America and Goldman Sachs saying we're going to have rolling waves of recession, we're going to have big challenges, in the bond markets and the stock markets, that's a sign that the big money kind of knows we're headed into this extended recession period. And we've had the frothiest stock market for 13 years that we've had in the history of the stock market since the last Great Recession. It's time for a big correction. It's time for a big clean out. And I think that's probably coming. So I do expect longer term gold and silver to continue to do well, even if they pull back on short term weakness. We'll have to see what happens there.